in the United States, not one, not two, but 9 Ethereum futures exchange traded funds or ETFs started trading on Monday for the first time ever. The ETFs are being offered by investment managers like VanEck, ProShares and Bitwise, among others. While the trading volumes on these ETH futures ETFs was thin, their approval is being seen as a positive sign for the Bitcoin spot ETFs that are waiting in the pipeline. Let's get in Benjamin Stani of Matrixport then to talk more about them as well as other market moves. Ben, good to see you.
Thanks for having me.
Well, let's get straight to it. ETH futures ETFs have hit the US markets this week. Response was a bit muted. Now, some of these ETFs will also offer a combination of Bitcoin and Ether futures. What factors do you think could influence investor interest and market dynamics in the coming weeks?
In essence, they're just a step into what we're seeing as the institutionalization of major crypto assets, and ETH and Bitcoin have both cemented themselves as the big institutional assets that everyone is interested and wants to get exposure to. The issue with futures ETFs is they're still not as attractive in terms of like cost ratio versus spot ETFs, and there's not really a reason why if you have access to spot you would prefer trading the futures. But obviously SEC hasn't approved spot yet, and so that's why everyone was excited about ETH futures. I think it's more symbolic that the SEC is actually granting approvals rather than the listing itself of the ETF, and you can see that from the volumes.
Now, building on the past trends, do you think Bitcoin will have a positive October, especially in context of that return to the $30,000 mark?
That's a $1 million question on when do we see Bitcoin hitting certain hurdles. I think historically people like to point to the fact that like in the past 10 years, 8 out of these 10 Bitcoin has had positive returns over in October with the ETF futures approvals. We've seen quite some marketing stance from listers, from ETF issuers. So obviously if you get that could potentially be a strong catalyst if you have TradFi players putting in marketing dollars in getting that asset class further out well known. But it's more on the sentiment side, I feel. And then one other aspect is obviously we're now heading close to about a good 6 months out into the next Bitcoin halvening. So that's a narrative that will also continue to gain steam.
And what does that mean for miners?
Miners are quite profitable at this current juncture. We can see that because hash rate continues to go up, which means more people are putting mining resources and the hash power onto the grid. We can also see the difficulty continue to go up in line with hash rate. And so this, together with Bitcoin price, has been relatively robust over the last couple of months and now even trending up last few days. And energy costs that have flattened out have led to miners actually being profitable at this stage.
Now, a Chainalysis report says that Hong Kong has remained active despite a crypto winter thanks to its OTC markets. But do you think the recent fraud incidents have dampened the crypto mood in the city?
So there's clearly a tendency for regulation in Hong Kong and for regulatory clarity and a stricter enforcement of that. I'd like to look at it on a positive scale and would hope that with the new regime and access the licensed way for retail to access this class as a new asset class, that we'll actually see more broader participation. I would expect that quite a few people were on the sideline because they didn't want to access crypto assets with a pawn shop, an OTC player. But now that there's licensed players in place that can give retail access, that would probably be an opener for tapping a new customer segment.
And as we let you go, why don't you gaze into your crystal ball? Do you see a crypto market rally ahead?
What we'll see over the next few weeks is still probably volatility, particularly driven from the macro side. Yeah, we're already in Q4, and I think what we've seen this year is that correlation with traditional asset classes and Bitcoin have held up quite strong. Most likely the higher for long interest rates and the stronger inflation numbers that we've seen are probably putting at least a lid on how much we can rally into the year. And